Hey folks, we're going to start today with financial analysis. So there are three types of basic financial analysis that are done. You can do a horizontal analysis to track trends. My basic formula for that is take the change and divide by what you're coming from. Vertical analysis is where you're trying to decide or look at the percentages of all of the assets as a base of total assets or all of the income statement items as a percent of net sales. And then the final one is ratio analysis. So on this video, I'm going to take care of the horizontal and the vertical. On the next video, I'll do the ratio analysis. Okay, so let's get started with horizontal analysis then. So on the balance sheet, we'll just start with the balance sheet and then we'll move to the income statement and the statement of retained earnings. The way you work it is the same on every single thing. So what you do is you get comparative financial statements. So I have year 2 and year 1 for a company. You compute for the change, you want to compute the amount of change and the percent of change. So the amount is simply the difference between year 2 minus year 1. Okay? And then to get the percent, you take the change, 51,000 in this case, divided by what you came from. So you came from year 1. So to get the percent, it is the change divided by what you came from, which is C17 there. And you do that for every single thing. Make sure that you do your formulas correctly though to get the positives and the negatives in the right spot. Okay? So for inventory, notice it went down from 189 to 180. It went down by 9,000. And so the change is a 5% decrease. Notice the minus sign in front of the 5%. That's all you have to do. Okay? That's it. And you do the same thing with the liabilities. You take the change is the difference between year 1 and year 2. Okay? So you're going down from 47 to 34, and then the percent is the change divided by what you came from. Okay, that's easy enough. Over on the income statement, we're going to do the very same thing. So we have comparative financial statements again, year 2, year 1. Change is what you went from year 1 to year 2, so we increased 110,000, which is a 25% increase. The 110 divided by the 440. Same thing with the positives and the negatives. Make sure you take care of everything there that you need to. For comparative statements of retained earnings, we've got year 2 and year 1. Again, the change is year 1 or year 2 minus year 1. So we increased here and it was by 12% because 14 divided by 120 will give you 12%. Okay, so let's go over to vertical analysis. So the vertical analysis is also called common size analysis. Again, we need to have comparative financial statements. So in year 2, we have year 2 statements and we have year 1 statements. And then I have the ratios. Let's see, I should probably put those in the middle. Let's see if that'll work. Yep, it worked nicely. Okay, I'll do the same here. All right, so what we're going to do is we're going to take each number on the balance sheet as a percent of our total asset number. So notice that your total asset is 100%. Total liabilities and equity, it's the same number, so it's 100%. So to compute the 12% for cash, take 73 divided by 597 and you get 12%. So that just means that cash makes up 12% of your assets. Accounts receivable is 14%, inventory is 30%, your equipment is 42% minus the 11% for accumulated depreciation. Okay, for the liabilities and equity, again, you're taking a percent of total assets. I guess you could do a percent of total liabilities and equity because it's the same number. It doesn't really matter. But the definition is you take your accounts payable and divide by total asset number. Because everything on the balance sheet is a percent of total assets for that year. So in year one, your cash of $22,000 is going to be 4% of 545. So everything is listed as a percent of total assets for that particular year. Okay, let's move on to the income statement. And on the income statement, notice that net sales is your 100% number. So everything on the income statement is stated as a percent of net sales. So total sales of 550 represents 110% of your net sales. And the sales returns represent 10% of your net sales. Cost of goods sold is 71% of net sales. And you go on down. Now the other thing you have to remember on the vertical analysis that I forgot to mention earlier is that when you take 100% minus 71, this has to be the 29%. So you have to do your rounding so that not only does the fraction work, but the math, adding and subtracting, also works. Okay, does that make sense? I hope so. All right, the 4% and the 5% need underlines there. Because 29 minus 4 is going to give you 25, plus 2 is going to give you 27%. Okay, that takes care of horizontal and vertical analysis. The common size just means it's the financial statement's all in percentages. Okay, come back for ratios.